After watching this video, you always know what is the best time frame to trade for any strategy that you are going to see out there. You see, as a trader and as an educator, I always test new strategies and always try to optimize my strategies so that I can keep my advantage over the market. But whenever I post a new video and share any strategy, the biggest question that I get is, what is the best time frame for this strategy? So in this video, I'm gonna go ahead and explain to you how to choose the best time frame for any strategy out there. So before we get started, I want to thank fastbull.com for partnering with me and help me create this video. So fastbull.com is the fastest growing news platform out there. It provides you with all the news and you can see high impact news that can affect you in the market. Also on fastbull.com, we are going to get what are called AI signals. These are trading signals that are created by artificial intelligence. You are not only going to get that, you are also going to get different analysis from different traders. As you can see on the screen right now, you can follow any of the analysts that you have and you can see their win rate, and also you can follow their trades and trade with them. They also offer you different videos and trading education. So if you go to their website and go to video, you are going to see countless of videos on their platform. There's different data that you need that will give you an edge. All you want to do is go to fastbull.com through the link in the description, and I will see you on the other side. Now back to the video. Now when we talk about time frames, there's two things that happens most of the time. Most people think that the time frame is going to change the result of the trade. But let me explain to you. What you need to understand is what makes a time frame. A time frame comes up with the data that you are using to analyze the market. You see, in trading and in technical analysis, we have four prices that we care about. We have the opening price, the closing price, the high and the low. And these are the four prices that we care about. And we combine these four prices of different times and or for different days so that we can come up with the chart, and also we can build our strategies from that chart. But what you need to understand, that only thing that differs in the time frames is the time that you take to get those high, low, open and close prices. So for example, if you are using the 1 hour time frame, you are using candlesticks for the 1 hour. And what does this candlestick do? They just record the opening price, the closing price, the high and the low for that 1 hour. And when the next hour comes, it records again the opening price, the closing price, the low and the high for that. And then we combine these candlesticks to create the market and to create our strategies. That is technical analysis. When we use 1 minute time frame, you are just using 1 minute, the opening price, the closing, the high and the low of that 1 minute. So by knowing this, you understand that okay, there's different time frames and the concepts are the same. So any strategy that you are going to go and use out there is not going to change just because you changed the time frame, especially if the strategy is based on technical analysis. Why am I saying this? If I show you this chart of a 1 hour time frame, you're going to see that I can mark different levels of structure. But also at the same time, if I show you the 1 minute time frame, I can also mark different levels of structure. And this different of level of structure, you can see them on any time frame. But the difference now is that the time it takes and the candles it takes to create this. But the concept are the same. Chart patterns are the same, trend lines are the same. Anything that uses technical analysis is the same. So what am I saying by this? You need to understand this. When you are trading based on time frame, your win rate, if you are winning 50% of the time, it's not gonna change much. What is going to change is a few things. Number one, the time that you are going to spend in a trade. See, what makes the difference between a scalper, a day trader, a swing trader and a positional trader? A scalper gets in and out of the market in a few minutes or seconds. Why? Because he is using a few seconds or 1 minute time frame. A day trader is going to spend hours in the trade. Why? Because he is using the 5-minute time frame to the 1-hour time frame. A swing trader spends days in the market. Why? Because he is using the 4-hour and the daily time frame. A positional trader spends months and years in the market. Why? Because he is using monthly time frame or maybe yearly time frame. So what you need to understand is that the time that you spend in a trade is what is determined by the time frame, not the win rate of the strategy. The second thing that is affected by the time frame is your position size and the amount of money that you make after each and every trade. When you are trading on a smaller time frame like a 5-minute time frame or 1-minute time frame, you can place your trade and place a 10 pip stop loss, which means your lot size can go higher because it's just 10 pips. You can risk $5 per pip and you can risk $50 on that trade. But when we come to a higher time frame like a daily time frame, your stop loss needs to be bigger. It needs to be more than 100 pips. So now your position size is gonna change, because if you still use the position size of $5 per pip, now you are risking $500 in the market. So if you have a small account, that means the bigger time frame that you are going to be using, it means you need to use a smaller position size. So if you are using 0.50 to make $5 per pip, if you have 100 pips stop loss, you might now want to make 5 cents or 10 cents or 50 cents per pip, because now there is a lot of pips in between. So your stop loss is gonna be far and your number of pips is gonna be more. So the smaller the time frame, the bigger the lot size. The bigger the time frame, the smaller the lot size. So your position size is gonna change. You need to understand this. Number 3, you need to understand that the time frame that you choose is gonna determine how emotionally attached are you going to be in the market. Think about this. How many trades does a scalper place in a day? A scalper can place 15, 20, 30 or 40 trades in one day. Why? Because he's just taking a few profits. Some scalpers can use big lot sizes if you are experienced, and you can place 3, 4, 5 trades per day. But most of the scalpers, especially beginners, they place a lot of trades. And the more trades that you are involved in the market, the more emotionally you are attached to that market. And this is true. And if you think about it, if I place a trade on a daily time frame and I know that this trade I'm risking $100 to make $300, I can spend 2-3 days just waiting for that trade, and then I know that after 2-3 days I will make $300 or I will lose $100. But if I'm placing 5 trades in 5 minutes or 10 trades in 1 minute, that means I have to deal with all the trades, and emotionally I'm going to be involved in the market. So the smaller the time frame that you take, the higher you are going to be invested emotionally in that market. So my tip is this: if you want to make money in the market, number 1, know the time frame that you are going to use and stick to that time frame. And if you do that, you are going to see that you already know the amount of lot sizes, the average lot sizes that you use. You are also going to know how your strategy performs in that particular time frame, not like placing your trades in any time frame. Number 2, you want to understand that if you are a beginner, use bigger time frames. I know that most of you guys, you are tempted in using 1 minute time frame and make money fast, but as a beginner, you don't want to be involved in a lot of trades. Why? Because what makes you money in the market is not technical analysis, it's not the strategy, it's the mind. If you are invested more in the market emotionally, you're going to make a lot of decisions that you didn't want to make. So bottom line, what is the best time frame for you to trade? If you want to place your trades and make money in the market, stay away from the 1 minute time frame. Start from 15-minute time frame to the 4-hour time frame. Choose one time frame, those time frames, and stick to that time frame, and choose any strategy that you want. Test it on one time frame, see how it performs. If it performs well, you can increase the amount of risk that you are using in that market, and then you can make more money. But there is no specific time frame that you say, okay, this strategy works only on the 1 minute time frame, but it doesn't work on the 4-hour time frame. It doesn't happen like that, because the price action that is happening on 1 minute is also going to happen on 4 hours, but it's just going to take more hours for you to see that same price action. Now, before you go, guys, I want you to click the link in the description to go to fastable.com and make sure you check them out, and then they will see that you came from here and the partnership that we had have materialized. So thank you for watching this video, and I will see you in the next one.